Thank you everyone for your patience and welcome to Senior Living Smart Partner Webinar. Today we'd like to welcome Don Poole of Life Care Funding. Before co-founding Life Care Funding, Don also served as managing partner of Trinity Medical Services, a medical service corporation specializing in leasing and sales of durable medical equipment, specialty mattresses, and supporting clinical services for prevention and treatment of pressure ulcers to long-term care facilities and rehabilitation hospitals. Trinity was founded in 2003 and was a division of Summit Services Group, a healthcare service corporation which was purchased in 2007 by Healthcare Service Group, and before Trinity, he served as Senior Vice President of Sales and Marketing for Summit. Prior to joining Summit in 2002, Mr. Poole enjoyed a successful career in broadcast journalism, where he worked for CBS News as White House producer, senior broadcast producer for the CBS This Morning, and as producer at the CBS Evening News with Dan Rather. Mr. Poole received an Emmy for his work at CBS and also worked as a writer and producer for NBC News and Time Warner Productions. He now lives in Rye, New York with his wife and 3 children. Please feel free to send questions or comments, and feel free to tweet questions or comments at GetSLSmart or use hashtag SmartWebinar. Now let me turn the webinar over to Don, who will discuss the best kept secrets of funding senior living. Don, let me turn the webinar over to you now.
Thank you, Renee. I appreciate it very much. I'm glad to be with you today. I will accept the webinar invitation from you.
Super.
Does everyone see my screen?
Yes, it looks great. Thank you.
Great. Well, thank you very much, Andrea. Renee, I'm sorry. I'm glad to be here, and thanks to Deb Howard and Andrea for having us. We're very excited to be a member of Senior Living Smart. It's a great service and a great resource for you independent operators to help your seniors and your businesses thrive. What we do at Life Care Funding is we help people pay for their senior living using an asset that they don't know that they can use. What we do is we use a life insurance policy that a senior may not need or can no longer afford. We convert that into a long-term care benefit plan that pays your community on a monthly basis according to the family's need. We basically turn a life insurance policy death benefit into a living benefit to pay for assisted living. And it's a new program. You know, people don't generally think of their life insurance policies as something they can use to pay for care, but it's a very valuable asset that they own that they can use to pay for their care directly. And we all really know what the problem is, right? There are a lot of seniors in this country and a lot more who are going to need some form of long-term care, assisted living, skilled nursing, or home health care, and many of them are not prepared to pay for it. 60% incorrectly believe that Medicare will pay for them. And 75% of all seniors will exhaust all their savings in less than 1 year trying to pay for some form of long-term care. Well, if they have a life insurance policy, they may be able to pay for their care with that asset instead of abandoning the policy or lapsing it for little or no value. Now, this is not long-term care insurance. Long-term care insurance is a great product, and everyone should have it. Unfortunately, only about 7% of the population has long-term care insurance. This is using an existing life insurance policy that somebody may have purchased 15, 20 years ago and converting that death benefit into a pool of money, a long-term care benefit plan that pays directly to your communities on a monthly basis. Now, the cost of care continues to rise, and people are struggling to meet that care. Obviously, Medicare does not cover an extended long-term care services, and many people don't know that. But keeping up with the cost of senior care is a challenge, and seniors generally go through many of their assets very quickly during the process in which they are seeking care and paying for care. You know, the other thing is that people really need the services you provide. They want to go into assisted living communities. They want home health care. They want the services that you provide, but they can't afford them. And actually, they want them desperately because, you know, a lot of people struggle with taking care of a loved one, both financially and emotionally, and that's very taxing on families. So you are the answer to a lot of families' problems. And what we are trying to do is help them move into one of your communities, by addressing affordability issues. You know, when we're talking about life insurance in this country, we're talking about an enormous amount of money. Seniors in the United States over the age of 65 control about $500 billion of death benefit, of life insurance policies death benefit. That's a lot of money. That's $500 billion. Unfortunately, they have very limited options to access the value in that policy if they can no longer afford that policy, or they don't need it anymore, or if they're needing long-term care services. Again, this can be a resource for them. 88% of all policies issued will never pay out a death benefit. Now, a lot of that is term policies that are designed to lapse once their need is done with, but a lot of that is seniors in the last few years of their life who are overwhelmed by their health care costs and lapse or abandon the policy for no value. Some of them can't afford the premiums, or they may be spending down to Medicaid. Medicaid does not let you keep a life insurance policy. It is considered a disqualifying asset in terms of Medicaid eligibility. 38% of people who are spending down to Medicaid had a life insurance asset that they could not keep and qualify for Medicaid. So that's a lot of people, 38% of people, who could potentially have used this program to stay off of Medicaid with a private asset that they own and save the taxpayers money. Obviously, when you have private funds to pay for your care, you also have many more options. When you go onto Medicaid, you're a ward of the state, and you go where the state decides you go. If you have private funds, there are many more options available to you. So when people can't afford the premiums and they need to qualify for Medicaid, what they do is they generally just stop paying the premiums or lapse or abandon the policy for no value. That is really the worst thing that they could do. And quite frankly, the life insurance companies really don't mind when this happens because it's a windfall for them. They get to keep all the premiums that have been paid into the policy over many years, and they are no longer responsible for paying out a death benefit when somebody lapses or abandons their policy. So we don't want that to happen, and this program can prevent that from happening. What else they can do potentially if the policy does have a cash surrender value, which many policies do not, but if it does, they can surrender it back to the issuing life insurance company. But usually that cash value is less than 10% of the policy face value. In fact, the national average is 4 to 6%. And that's because they realize that seniors who have smaller face policies really don't have a lot of options to access the value in those policies. But there is a much better solution, and that solution is to convert your policy into a long-term care benefit plan to pay for assisted living, private duty home care, skilled nursing, memory care, independent living, or related senior care services. And what we mean by related senior care services is if somebody needs a specialty mattress to have at your assisted living community, or if they need a hospital bed, or if they need a Hoyer, or something else to stay comfortable in their community, we will pay for that. We will also pay for in-home care to be delivered in an assisted living community. Private duty home care can be delivered in an assisted living community, which prevents people from having to move out to a higher level of care, sort of watching your back door, so to speak. So we will pay for a variety of things, but we won't pay for a trip to Mexico or a trip to the casino. We will only pay for services and long-term care that is delivered by a licensed care provider. So it's a great option for many, many people. Now, how can we do this? You know, I get asked all the time, Don, you know, how do the life insurance companies feel about this? Don't they let you do this? Don't they not like this? Won't they prevent this? And you know what? They don't really like it because, again, we're holding them responsible for that death benefit. But the thing to know about life insurance is you own your life insurance policy. It is a financial asset, just like a stock or a bond. And that was determined in the Supreme Court. A guy named Oliver Wendell Holmes wrote the majority opinion in 1911, and he said a life insurance policy is personal property, just like a home or stocks. You own your life insurance policy. The life insurance company does not. And you need to know that because you are legally able to use your policy to pay for your long-term care using our program. Now, why would somebody consider this option? Well, that's a great question. You know, most people purchase life insurance
to protect loved ones, but over time circumstances change. First of all, are your kids now grown up and independent? If they are, you may need that money to pay for your own senior care. Are the premiums of your policy becoming a burden? Well, this is a way to relieve yourself of those premiums as well as raising funds to pay for your long-term care. Do you want to preserve other investments like a stock or a bond portfolio or a home? You know, a life insurance policy is a depreciating asset relative to inflation. And what that means is that a $100,000 death benefit today is not worth $100,000 tomorrow once inflation gets done with it. You know, a home, stock portfolio, those are expected to appreciate in value over time, so you may want to use your life insurance to pay for care so you don't have to sell your home or a stock portfolio that's increasing in value. Again, if you're applying for Medicaid, you're not going to be allowed to keep your policy, and so you may want to use it now to pay for your care and keep yourself off of Medicaid. And are your care needs just increasing beyond your ability to pay for them? Another reason to consider this option. You know, people often ask me, you know, Don, why would I use my life insurance policy to pay for care if I was, you know, trying to leave a legacy for my kids? And that's, again, a great question. And, you know, I like to use myself as an example about how insurance needs change over time. And when we're talking about insurance products, what we want to consider is insurable interest. What is the insurable interest you're trying to protect when you bought your policy, and does that insurable interest still exist today? I want to show you why I bought my life insurance policy. Not that dog in the middle, that's a gash and drool machine, but these two kids are the reason I bought my life insurance policy. They have an insurable interest in me. They are wholly dependent on me for their livelihoods, for their shelter, for their food. And the reason I bought my life insurance policy is because I'm the only breadwinner in our family. And in order for me to go to sleep at night, I got to know that if I don't wake up for some reason, these kids will be taken care of. That's why I bought my policy. That's why I will keep it for the foreseeable future. I need it. I want to protect these kids. I owe that to them. Now, for the sake of argument, let's say I grow to the age of 85 years old. Well, when I'm 85 years old, I got one thing to say. These kids better have jobs by then. Hopefully they have jobs. They have savings. Maybe they even have insurance products to protect their own children. Well, at that time, their insurable interest in me will have changed. They will no longer be completely dependent on me. And if I need money to pay for my senior care, I may want to use my life insurance policy to pay for it, because the last thing I want to do is be a financial burden on these kids in a later part of my life. So that's just an example of how insurance needs change over time, and about how you may be able to want to reconsider why you bought your policy, and if you need care, consider using it to pay for your care. So how does this program work? Well, we convert a life insurance policy into a long-term care benefit plan. The value of the policy is deposited into an FDIC-insured irrevocable benefit account that is for the protection of your senior. If we go out of business, that money is still there. That is there, protected, administered by a third party. Automatic payments are made directly to the assisted living community. Those payments can be adjusted on a monthly basis to address changing care needs. We do preserve a funeral benefit for the family. We don't want people to get caught in the lurch without enough money to bury mom or dad. And the conversion and plot complies with all state life insurance regulations. This is a heavily regulated transaction, and that is a good thing, because that is for the protection of your senior. Any remaining balance is paid to the family or a named beneficiary, so there's no penalty if a senior should pass away with money left in their account. That money will go to the family in the form of a death benefit. Very, very important feature of our program. Now, who can take advantage of the life care benefit? Well, almost any type of life insurance is eligible for conversion. It can be a term, universal, whole life, group life policy. The policy needs to be $50,000 or greater in order to be converted. We pay again for assisted living, home care, private duty home care, skilled nursing, memory care, independent living, usually with home care, and related senior care services, such as building a ramp up to a home, getting a specialty mattress in an assisted living community, anything directly related to their long-term care we will pay for. We won't pay for a trip to Mexico or a new boat, but anything related to their care will be covered under this program. Now, it's also a tax-free benefit and a Medicaid qualified spend down, and that's important. The monies from the benefit account are used for long-term care services, qualified long-term care services. They are tax-free under the Master Code, and if the senior's current estate is less than $5 million, it is tax-free to the beneficiaries as well. It's also Medicaid qualified spend down. Medicaid approves of this program to liquidate an asset that is disqualifying according to Medicaid eligibility. So people who think they can keep their mom's policy and get her onto Medicaid, that's not correct. But using it in this way is approved by Medicaid and something that keeps them off of Medicaid for longer. Again, the states realize that this keeps people off of Medicaid, saves the taxpayer money, so it's a good thing for everybody. Now, I'd like to do two transaction examples. This involves a 70-year-old male who had a $250,000 term life insurance policy. Now, when his daughter contacted us, she was getting ready to lapse the policy. Again, the reason the life insurance companies don't want us having this conversation right now is because of that number. She would have gotten nothing if she had lapsed the policy. Now, there's no cash surrender in a term policy, but we were still able to convert this policy to a $150,000 life care benefit, or 60% of the death benefit. Now, when this family had used their benefit to pay for this gentleman's stay in an assisted living community, and he passed away, they had only used about $90,000 of their benefit, so there was still $60,000 remaining at the time of his death. That money went to his daughter in the form of a death benefit. So this worked out real well. The policy left a legacy for his daughter, which was the original intent of the policy, but it also paid for a good deal of his senior care at a time when they needed it the most. So it works very well in this particular example. The next example involves a 73-year-old female. She had a $100,000 universal life policy. Now, this policy did have some cash value, but when this woman contacted us, the cash had been drained to pay the premiums. What the life insurance companies will do is they'll deduct premium payments from the cash account until there's no more cash, and then they'll send you lapse notices, and that's exactly what had happened here. Well, this woman could not afford the policy as well as care for her mother, and so she converted the policy to a $35,000 life care benefit, or 35% of the death benefit. Now, this is a win-win proposition. First of all, for the consumer, they get to use an asset that they own and that they've already paid for to fund their long-term care expenses. There are no additional premium payments for them. There are no fees or charges for using our program, and it keeps them off of Medicaid. Any remaining balance is paid to a designated beneficiary. It's a win-win proposal for the care provider as well. For an assisted living provider, it increases occupancy and revenue. It addresses affordability issue for prospective and current clients. It can pay off outstanding balances for some of your current clients who may be running a deficit. It's a private pay source of fund, keeps people off of Medicaid. There are no administrative burdens or fees for the community. This is not long-term care insurance where there are recertifications required for ADLs and those sorts of things. Once they qualify for the benefit, that money goes to the facility, no questions asked until that benefit is depleted. So it's really a win-win proposition. You know, even the life insurance companies don't lose because they've already made most of their money in the first 6 years of a policy's life, and most of the policies we see are 12 to 15 years old. So really there's no losers in this transaction. The life insurance company doesn't make as much money, but they certainly do still make money. So important to understand. Now, how do you learn more? How do you get more information to market this program to your residents and prospects? First of all, we have written materials. We will send you brochures, frequently asked questions, and case studies to hand out to families on tours, on family nights, to help them, educate them about this program, free of charge. We'll also brand them with your company logo. Also online, we have an enormous amount of resources. Our website, www.lifecarefunding.com, has a wealth of information, training videos, testimonial videos, press articles, blogs, links, and the like. We also do weekly training webinars every Tuesday at 4 o'clock Eastern and every Thursday at 1 p.m. Eastern, done by Trevor Nicholson, our Client Services Director. Any one of your folks can join on that. We would also be glad to set up one-on-one training for your communities at your convenience. Merely contact Trevor Nicholson at tnicholson@lifecarefunding.com, and he will arrange personal training for your communities. But we have a number of ways. Just give us a call. We'll work out ways to train your folks. We're here to help. We're another resource for you to help move people into your community. Now, really all comes down to what you guys do and asking that question. You know, we like to say we do 95% of the work, but if you guys don't do your first 5%, then we don't even get to do our 95%. And it really comes down to asking that question. Do you have a life insurance policy? You know, no one's going to walk into your community and say, hey, I have a life insurance policy. Can I use it to pay for my care? They just don't know it's an option. So it's incumbent upon you to ask that question. Do you have a life insurance policy? If they say yes, say, well, you may be able to use that policy to pay for your assisted living by converting it into a life care benefit, which pays for your stay at our community directly. We work with Life Care Funding, who helps seniors and their families pay for senior care using a life insurance policy. I'm leaving you with some information on Life Care Funding. Please feel free to contact them directly, or I'd be happy to connect you. That's really it. You know, without asking that question, you'll never know. If they say they don't know they have a policy, say you need to find out, because you could use that policy to pay for care. Always feel free to connect them with us as soon as possible. The quicker we start having the conversation with the family, the more likely they are to use our program to move into one of your communities. It's very easy. Ask them if they have a policy, provide them with some information, and connect them with us. We call it ACE. And it's, you know, life insurance can be a complex topic. So let us do the heavy lifting. Get them to us as soon as possible. But you have to do your part. You have to ask that question. Do you have a life insurance policy? Then connect the family with us, either by email or phone, and provide them with some information to educate them. So ACE, ask, connect, and educate. That's the key to making this program a success for your community. We've been getting a lot of attention in the press because what's happening is the states are realizing this is a way to keep people off of Medicaid, and they're struggling with Medicaid budgets. So the states are passing legislation that informs seniors about this program, mandates that their Medicaid departments inform seniors about this program. They don't have to use our program, but states understand that people need to know about this program so they can make an informed decision about a very valuable asset that they own. And that they are abandoning in record numbers. So it's very important. We've been on a number of broadcasts, a number of publications. We'd be glad to share those publications with you, but there's a lot of legitimacy for our program out there, especially from the states who are struggling with Medicaid budgets and watching people dump their policies and go right on to Medicaid. So a lot of stuff on our website about all these publications, and we'd be happy to share any of this with you. Again, it's about working together to help seniors get the care they need when they need it. So I'd like to thank you all very, very much. Anybody who would like to participate in this program, set up training, become a trusted partner, please feel free to call me at any time. You know, we're not an insurance company. We're a small, mid-sized company whose mission it is to help seniors use their life insurance to pay for care. And we're from the long-term care industry. We used to run nursing homes and assisted living communities, so we know how to listen. We know what families are going through, and we understand that this asset could be a key, a solution to their funding problems. So with that, I'd like to open it up for questions, Renee, and thank you all very much.
Hello, Don,
Anybody
can
have
you hear
any
me?
questions?
Yeah, I do have some questions for you. Sorry, I think my mute button was on. Thank you very much. What valuable information for people to know how their funding for senior care can be delegated and allocated to help them. One of the questions is, what does the family need to provide an LCF with to see if they might qualify?
Yeah, that's a great question. You know, what we need from a family is a copy of the policy itself or a current policy illustration. We also need some medical records to do an actuarial analysis on the policy in order to offer a benefit amount. So those are the critical things. But really with a very quick 5-10-minute conversation, we can pretty much figure out if we're going to be able to help a family or not. We don't want to create false expectations. So we like to, you know, if we can't help, we want to let them know so they can move on with their lives, obviously. But a quick conversation with us, we can figure out pretty quickly what we need and get the ball rolling. It takes us about 30 to 45 days to complete the transaction, but generally the sales cycle is around 3 months, where we first start talking to a family, explaining the program, to when they decide to do it and move in. So that's usually about the sales cycle. We've done it much faster, but a lot of people, again, they don't know about this. So once they hear about it, they need to digest it a little bit. And then what happens is another premium payment comes due, their family member needs some more care, and again, they come back to us and say, hey, now I'm ready to do this. So it's all about educating them about the option and getting them to feel comfortable with us and our company, which they do quite quickly.
Good. That's good. Thank you. What is the average size policy that you typically work with?
That's a great question. You know, our average policy size is $150,000. We work with policies generally between 50 and 500,000. We go up to $1 million, but generally in the assisted living channel, we see policies between $50,000 basically and $500,000. 150 is about the average. We've been seeing a lot of $200,000 policies of late, but again, there's lots of different policies out there, but we can work with anything above $50,000.
Okay, good. Thank you. One last question is, do you ever face objections from children or beneficiaries of the policy?
That's a great question. You know, we generally don't, because it is usually the son or the daughter who's calling us. And you know why? It's funny. Most of the time it is the son or daughter or the beneficiary who's trying to convince mom to do this, because, you know, people who grew up in the Depression have this strong sense of leaving a legacy. And so they don't want to do it. They're like, oh, honey, I need to leave you a legacy, an inheritance. And what the daughter or son usually says is, you know, Mom, thank you so much, but we need to pay for your care. And the way they look at it is, sure, do they need $100,000 when mom or dad passes away? Absolutely. But what they really need, they need mom taken care of, and it can't come out of their own pocket. So they're more than willing to do this transaction to solve that problem for their loved ones. But if they do have an objection, then we don't do the transaction. In fact, everyone in the family has to sign, every one of the beneficiaries has to sign off on this program before we will do it, because the last thing we want is a family fight. So everyone, but generally it is the son or daughter who's driving the transaction and wants to do it on behalf of their parent. But that's a great question.
Absolutely. That's great. And it's good that they can all be on board on that decision. Dawn, I appreciate so much. I'm going to switch the screen over to me to show everyone the final offer that you have for the webinar for all the attendees. Hopefully everyone can see it now. The exclusive offer for attending this webinar is Life Care Funding Facts and FAQs. It'll be downloadable and available in a follow-up email, and we appreciate everyone coming. Such valuable information that Life Care Funding offers, and I really appreciate it. Thank you very much.
Thanks, Renee.
Yes, have a good afternoon. We appreciate it.
Bye-bye.
Bye.